Her former father-in-law has actually done it all financially. He was ranked the world's wealthiest man in 2008, and he still ain't doing too bad. And he is one of the most recognized billionaires in the world.
Mary Buffett was married to Warren Buffett's son, Peter. She gained unique insight of the complex world of investments. She is a best-selling author that has written 8 books on Warren's investment methods. Her latest book is called The Warren Buffett Stock Portfolio. Nice to have you here, Mary.
So great to be here.
So I have to ask you right away because, you know, we have college-age kids, not you, but a lot of my friends and I have college-age kids, and we've been talking, is college a good investment? A friend of mine, her daughter graduated in May, still has not found a job. She said she's getting no return.
I think education is a great investment, and I think it starts, as one of your previous guests was just saying, it starts with the parents. You know, you have to be involved. But college is, you know, any education, a highly educated workforce is one of the greatest things to an economy's GDP growth. Over and over it's shown. I mean, we have manufacturing jobs now, but we need trade schools. We need the community colleges. We need colleges that are affordable for kids. You know, everyone is not going to be a doctor, a lawyer, a financial expert, a banker. You need people with real skills that have the jobs out there in the manufacturing sector, that know how to run computers and robotics and things like that. You know, I think there are jobs out there. I think you need to be highly skilled. I think in education, the unemployment rate is a highly stratified rate, which is 8.6% and now 7.8%. But for college students, it was only 2% of college students with a professional degree that were out of work last year, compared to 12% of people with only a high school education. So it really matters, yes.
Mary, I think we sold you short in the introduction. You know, we should make it known that you did not achieve your financial knowledge simply through osmosis. You have a great economic mind on your own, and a lot of people, though, when they hear the name, want to find out what we can do on a day-to-day basis to make ourselves financially healthier. Long term, how do we get a little bit of this Buffett magic?
You know, I tell everyone that really savings is critical. I mean, 10% of what your gross income is should be put aside for savings for investment. But as you're saving that money, you're always looking for, you're researching companies that have been around, that are going to be around, and you're waiting for them to go on sale. You know, Johnson & Johnson's great company, 100 years old. And when the Tylenol recall came and the hip replacement bad news phenomena, as we like to call it, people were selling it, and the price per earnings ratio went down, and that's when people should be buying it. So you're identifying companies that have consumer monopolies, that have really great brands, that have a history of earnings, and then waiting for them to go on sale.
Would you suggest Facebook?
Warren has a saying, you know, never buy these on a day that has a Y in it, and those were called IPOs. So, I mean, I think that was a great example of when greed drives the market.
Is your theory then that we all need to be patient investors? Everyone wants to hit the lottery, buy the stock, the next day say, it went up 10%, I'm selling now.
Right.
Can most of us win with a strategy like that, or do most of us lose?
Most of us lose. I mean, you might as well just gamble because you probably have about the same odds, you know. And that's what a lot of people do. They're buying on the up, you know. We're buying when it's going down. So the patience element of the discipline is really, really critical because, you know, in 1969, Warren Buffett completely got out of the market. And it was in a time when the nifty 50 of the largest U.S. companies were growth companies. They thought if you bought them and held them, you'd be great forever. Well, Warren got out of the market because he saw everything was really overpriced. And he stayed out for 4 years looking for companies that had his kind of criteria, which we explain in our book, The Warren Buffett Portfolio. And he waited 4 years until a 70 crash, and then he walked in and bought everything at bargain basement prices. It's hard to do.
Mary Buffett. Fascinating information. The book is great. It is called The Warren Buffett Portfolio.
Stock Portfolio.
Stock Portfolio. So nice to meet you in person.
Such a great pleasure to be on your show. Big fan.
All right, we're going to provide some links to learn more about the book and where Mary speaks and her seminars are.
She just came
so
back
stay tuned.
from all over Europe. We'll be right back.